Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayson and thank you for joining me. The Australian dollar extends higher on Thursday, trading around the target area of 66 figure 10. Its strongest level since early October as markets scale back expectations of further RBA easing and possibly now talking of a rate hike. Solid domestic demand and sticky inflation have revived speculations that the RBA may even need to revisit rate hikes, with October household spending jumping by 1.3% and exports rising by 3.4%. Still, the push towards 66.5 to 67 cents is likely to hit supply, as we've recently seen back here in October or even earlier, which was around September. Nevertheless, all eyes will be on the Fed's preferred inflation gauge, the core PCE, this being the final key input before the Fed rate decision next week on the 9th, 10th, when they meet, with a 25 base point cut, should see further risk to the downside. Adding also fuel that speculations around a potential Kevin Hassett nomination for the Fed chair adds another layer of uncertainty. So with immediate resistance seen around 66.25, let's see if the supply, or let's see if this squeeze can head on towards 67 cents. A little bit of weaker play when it comes to euro has the dollar index, which measures the greenback strength against a basket of 6 major currencies, rebounded from the multi-week lows of 98.70 and settled around 99 figure 10. Despite the bounce, the broader tone still favours euro upside to 117. Given the fact that markets have priced in over 80% chance of a 25 base point rate cut next week from the Fed, and also dovish Fed signals keeping easing expectations intact, even as job market readings improve slightly, with layoffs and jobless claims both falling. Eurozone retail sales were mixed on the month, but a touch firmer year on year, leaving Friday's Eurozone employment and GDP print in focus, along with the US core PCE report. So turning to the technical, support seen around 116.20 to 115.85, and if that's intact, then we could see the further gains and reach the target of 117.15.25 and reassess. Dollar yen grinds lower and still holding to its bearish tone and hits a 2-week low, and therefore could see further risk. The call to the downside target of 154.25 as a potential move and reassess from there. Any upside attempts should be contained by 155.5. Sterling also a little bit finding profit taking after its Marubozu candle. Nevertheless, pattern still bullish, and we could still see this extension to the 134 area before profit taking may again return. A little bit of a weaker play when it comes to gold, but still holding above the level of 4,190 to 96. The call still to the upside of 4,244 to 50. Let's see if the market can reach there before reassessing and see if the broader call is still intact. That is at 4,500. Wrapping up with oil, still challenging this downtrend. Seen around 59.60-70, and a break there could see further scope on towards 60 to 62.5 as a potential target. Technically, we are in favour for this upside move, and that should limit any pullback to around 58.45 to 57.85. Well, that's a wrap. Thank you for joining me, and as always, look out for the intraday report, and I hope you enjoy the great start to the new weekend.